Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar is trading lower since taking out the 70-cent handle as renewed safe haven demand lifts the US dollar away from the lows of 99 and back closer towards 100 despite supportive domestic factors. The RBA's recent rate hike last week to 4.1% and solid labour data continue to underpin the Australian dollar, but escalating Middle East tension and rising yields are driving flows into the US dollar. With the Federal Reserve signalling only a gradual easing and geopolitical risks dominating sentiment, the Australian dollar remains pressured and back to the bottom side of its range, seen around 69 cents. Just keeping an eye on this level because if it breaks, may trigger further stops down towards the region of 68 cents. Turning to the euro, well, that engulfing candle failed to confirm any bullishness and instead has buckled and looking back towards the bottom side of its range, close to around 114.5, and with the key area beneath at 113.5 to 113.80. Technicals have buckled, so still keep an eye on this because if we do see further downward pressure, it would enlight the 113.5 level, and keep an eye on that because if we do see a break beneath there, it is a key major level, and therefore, if we see a break, it could trigger further stops down to 112. Well, the bull trap is back in focus as dollar yen regains most of its losses from the previous session. And as you can see, the market is still likely to be nervous towards that 159 level in case we do see a bull trap that wipes out all the gains and looks back towards 156 as a potential target. Turning to sterling, but the market is also weighing on the support again after this engulfing candle failed to ignite any bullishness, and therefore looking back towards the lower side of the range seen at 132.80 to 132.45 and reassess from there. Gold still continues to fall since crushing that trend line around 4,800 and now beneath 4,300, still wiping out a lot of the previous gains for this year. Keep an eye on the support. Now, I don't have a real strong outlook on this market at the moment since the break of the trend, and we're still triggering further stops. So therefore, I'd rather sit out at the moment and wait to at least some kind of demand returning to the market because we can still see this plummet close towards the region of 4,100 before turning around. Finishing up with oil, on the market's back to that top side of the range again near the 100 mark, and bearish technicals in terms of bearish divergence could actually see this completely reverse. So I'm a little bit cautious at the top side of this range, and let's see if we do get a downturn. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.